is, though, that they're actually saying this is raising three big questions that investors should be looking at right now. Firstly, what on earth is happening in China? Because the reality is that China's been powering a lot of global growth, and people are very concerned not just about the economic slowdown, but the loss of control by the government of the markets. Secondly, people are also saying, well, if you look at how the U.S. stock market's been moving recently, it's really got ahead of where the economy is.
Right.
We've seen big run-ups on Wall Street.
So this is actually, Gillian, this is actually, even though a lot of us certainly aren't happy about, our retirement savings going down, it's actually a healthy correction. It's actually getting more in line with the reality of where the economy is, right?
Absolutely. In some ways, you could say it is getting more in line with fundamentals because the U.S. economy is recovering, but it's not recovering quite as strongly as the stock market might suggest. But the other big issue people need to watch right now is what this means for the Fed, because certainly Janet Yellen was warming up the markets. Expect a rate rise in September. That's probably going to be harder to push through, and that's something which could have a lot of implications.
And that was another thing Mike Barnicle, as I was watching this yesterday, he said, well, Janet Yellen's not going to allow rates to go up, so we either lose 588 points in August or we lose 588 points in September. I mean, of course, the reason why all this happened is because I invested in the stock market for the first time ever 3 weeks ago, went heavy in oil. That's working well. They were at their 52-week low.
Well, that's a great contrarian.
But the way I looked at it is when they started talking about possibly raising rates, as Gillian was saying, they're either going to raise the rates in September and we're going to have the correction then, or they're going to have the correction now in anticipation, and now she's not going to raise it.
Or they'll raise them later this year. But
later this year.
You just raised a point that I find truly fascinating. Gillian, who are the investors in the Chinese stock market? Where do they get the money to invest in the Chinese stock market? And what is the story on the historic debt that China is carrying?
Well, those are great questions because, unfortunately, a lot of the investors in China have been retail investors. They've been suckered in, if you like, in recent months. A lot of them have borrowed heavily to actually invest, and those investors right now are going to be pretty unhappy. It's important to keep a sense of perspective because, actually, even after these crazy falls, the market is still only back at where it was 8 months ago. So it has these big corrections do come after a very dramatic rally. But one of the really important questions right now is, what is this going to do to the new generation of Chinese who are coming up on the back of economic growth, who thought that their economy and their stock market would keep growing indefinitely? Is this actually going to start creating more political unrest, more challenges to the government? Are people going to start actually questioning the degree to which Beijing is actually in control of China? And a lot of people in America would say, who cares? But actually, having political instability or tension in China is not something that's good for global growth or for American stock markets.
All right, Gillian Tett, thank you so much. Greatly appreciate it.
Thank you. Thank you.
We've been saying around this set for 3 years at least that there was a bubble in China. We've had a lot of people a lot smarter and a lot richer than us saying, no, China's great, China's strong, China's going to keep going. So much of what's been happening in China, it's why I've been so skeptical about it, is it's been driven by the government. It's been driven by a centralized government. We went over there during the Olympics. Everybody was talking about their great infrastructure. You look local governments, they've been spending, driving up massive debt.
Exponential.
Massive debt because of the growth, the infrastructure growth, and China, 8th wonder of the world. And now they can't even control the stock market. It got too expensive for them trying to control the stock market. And I'm not saying China's going away, but there's a bubble there. There's been a bubble there, and it's been fairly obvious. And, Mike, the bubble has burst, and, we don't know how long. Is it going to be like Japan? It's going to be a decade? Are they going to start resuming growth now? Nobody knows. But China was not the economic wonder of the world when you had the federal government, pumping in all of this debt.
Their government.
China.
Their government.
China. And they didn't have an underlying economy, unlike the United States and the West, to actually support that.
Right. I mean, China's economy clearly is built on a tissue of debt, a thin tissue of debt. But the larger point is that it shows the world that our economy is truly the most stable economy in the world.